Hello everybody, how's y'all doing today? Let's talk investing. Before we get started, I need to say I am not a financial advisor, CPA, or anybody with license to give advice. But I reckon that's what I'm doing. Investing. Anybody can invest. If you're 18 or older, you can invest. There's probably 100 different kinds of ways to invest. You can invest in real estate. You can invest in a reits, which is a real estate investment plan. You can day trade. You can swing trade. There's just 100 different ways to invest. You can hire a firm to do your investing for you. You can invest into companies. There's hundred different ways to invest. But for this sake of this, we're going to be talking about investing in the stock market. And we're also going to talk about basically young investors. This is something most investors don't talk about. They just assume that everybody wants to invest already has $100,000 to invest with. Well, that's very seldom the case, unless you're the kid of a movie star or politician. You don't have $100,000 to invest with. But you can still start investing. In fact, I would suggest to start investing when you're young. Do not wait till you're 50, 60 years old, then try to say, oh, I'm about to retire. I need to start investing some money and give me something to retire on. It's too late then. Investing is a marathon, not a sprint. You start off slow and slowly build your investments up over periods of years. That way when you're 60, 70 years old and you want to retire, or if you do good investments, you might could even retire at 50 something. But the sooner you start, the better. You do not have to have thousands and thousands of dollars to invest. Now to day trade, yes, you do need at least $25,000 to invest. But day trading is, for a beginner, would be like going to a casino and trying your luck. That is not something a beginner should try to do. And I've made that mistake. And I've lost a lot of money trying to day trade. I was making $1,000 a day trading. Boy, I thought I was doing great. But within a span of a week, I lost over $30,000 day trading. So day trading has risk. And that is pretty much with all trading, whether it's swing trading, day trading, any kind of trading or investing, there's a risk. You should never invest money that you need to pay your bills and to survive. And that's why I'm trying to get across here. Even if I know things are tight everywhere, but try to eat at McDonald's fewer times and save that money, put it back for a week and maybe a month or two and invest that money. Now, if you invest in risky things, there's a chance you'll make more money. If you take a safer strategy, it's less chance of losing your money, but you'll make less money. So it's higher risk, higher rewards. You know, you can watch a lot of videos and they're gonna show you these graphs and tell you how you can make 30% interest a month and blah, 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 blah. In reality, it's not quite that easy. Now, like I said, there's ways to day trade yourself, or you can hire an investor to do it for you. There's firms out there that does investing. They'll get a percentage of your money. So therefore you'll get less money if you hire someone else to invest your money for you. But you can take that little bit of money you saved over a month or two, invest it, and if you invest it smart, it'll make a little bit of money. Well, the next month or two, you'll have a little bit more saved up, and you can add it to it, and just keep adding it to it. I heard a story once about a janitor. I think he was at a school janitor. Didn't get paid much, but he consistently took his extra little money and invested it. When he retired, he had millions of dollars. So, yeah, invest a little and add to it. Sooner or later, it can be like a snowball. It'll start getting bigger and bigger and bigger. Now, if you want to do your own investing, there's ways to learn. And I would not just jump into it and start investing. You need to learn what you're doing. As far as doing the actual investing, there's programs that you can learn on. Thinkorswim is one of them. You can download Thinkorswim, and it's fake money, but you can use that fake money to practice and learn what you're doing. It's not hard to get an app on your phone or computer that you can actually do real trading. TD Ameritrade, there's lots, you know. There's some that's little apps on your phone that I wouldn't fool with, not if you're serious. If you're serious, like Cash App and what's that other one? There's another one out there that's really famous. I can't even think of the name of it now. But I would not fool with that. Go with a professional company. They'll keep you out of trouble and less chances of losing your money, and you know. And then use a program like Thinkorswim to practice before you ever use real money. When I was studying trading, they said you need to make at least 40 trades. I would say that's nothing. You need to do 100 trades, fake trades, before you put real money out there. Think of it as a game. You know, it's a trading game. And I imagine there's other apps out there, but you can use Thinkorswim. There's fake money there, and you can invest it and either make a profit or lose it. Now you got to remember, just because it's fake money, you might have the tendency to be more risky. That's not a smart play. You should think of it as your real money and invest it accordingly. You know, would you really like to lose that real money? That's how you practice. There is a company out there that I don't want to give their name because I haven't talked to them about putting their name out there on my YouTube, but that'll be a later video. I am asking him to do an interview with me so I can do an interview with the guy that owns this company. He's not a broker. It's hard to explain without giving more details about his company, but hopefully I can get him to have an sit-down interview with me, and we'll make a video about that, and you'll have more of an idea. But he has a program out there that you can use that gives you the odds, and there's programs out there where you can go, if you want to invest in a particular company, you can go research this particular company, find out what's going on with it, why their stock is going down or why it's going up. When you go to invest in a company, you need to know why. What is going on with this company? Not just say, ooh, they went down today, let me put some money on there before they go back up. No. You need to know what's going on with these companies, what their history is, what their stock limits is, their normal fluctuation. Does it normally fluctuate down to this amount, then go back up this amount? Is it like a ocean wave? Or has something happened in their company that's caused it to just to drop out of sight, and then the next thing you know, they're out of business? Or did they just come out with a new invention that's sweeping the world and their stock's fixing to go sky high? Think of Tesla, or something like that. If you had invested in something like Tesla back when it was first started, or you'd be rich now, but you didn't know that. I didn't know that. Nobody really knew that. Well, I reckon there's probably a few insiders knew that. But you should always do your research on these companies before you put your money there. If you don't like that idea, there's things like the S&P you can invest in, which is in the NASDAQ 500. I'm bad with names, y'all. S&P 500. S&P 500. There's things like that you can invest in that, and what that is a group of businesses, 500 businesses they invest in. It's the way it's really safe. Not all 500 is going to go down in one day or go up in one day. You do a particular single business, their stock can drop dramatically in one day, or it can dramatically go up in one day. So there's different ways to invest. You should start young, and I know it's hard. You're young, you probably just got married and have kids. Even if you're not married and have kids, you're struggling. Everybody's struggling these days. I have kids that are struggling. I know. Some married, some not. They're still struggling. The world's tough right now. But just put that little bit of money back and let that little bit of money, while you're young, grow. It won't grow fast. The more money you invest, the more money you'll have in returns. But a little bit of money will make a little bit of more money. And then slowly you can add to that money, and then it'll grow a little faster. Each month, add a little bit. I don't care if it's not but $100 or $50. Just keep adding to it every month, add to it. There's things out there called a reits, which is kind of like the S&P 500, or, it's a group, it's a company or investment company that invests in real estate. Whether that real estate might be businesses, it'd be like a group, not just one business. It'd be a group of businesses that are like hotels, apartments, campgrounds. It could be any kind of real estate. But once you invest in them, they'll tell you what they're investing in, and you can pick from one REIT or the other to invest your money in. I've never invested in a REIT yet. I would like to. And from what I hear, they have very nice returns. Now, if the bottom falls out of real estate, their investment's probably going to go down. But it ain't going to, I don't think it'll ever go away, because the price of land's never going to drop to zero. or the price of an apartment rent is never going to drop to zero, you know. But I think that, me personally, I believe that's a safe investment. It's a reits. And I'm not giving you advice. I'm just telling you, for me, that I would like to invest in some reits. And then you get return on your money. And it may not grow. Whatever you invest is what you're going to get, basically like a dividend back on that investment. But, you know, it's not going to grow, I don't think, that much. It depends on if you take your returns and keep them, or keep investing it over and over and over. That's something you could do. You invest in a RIT. When it gives you a return, reinvest that along with a little bit of more money that you've saved, and keep investing it, and it'll eventually grow. By the time you get up in age, you'll have something to retire on, or maybe even before retirement age. I know a lot of people out there that's retired in their early 50s. So I'm just giving y'all something to think about. And please, whatever you do, do not invest money you don't have to lose. Think of going to a casino. How much money do you want to take with you to the casino to gamble with? Same way with investing. If you don't have it to lose, if that's your light bill or your apartment rent, don't invest it. I'm not going to say you are going to lose it, but I'm saying there's a chance. There's always a chance to lose it when you invest. Only invest the money you have to lose. Your McDonald's money, your theater movie, your going to the beach money, you know. I know everybody needs a day off, but if you want to start investing, you need to find ways to save a little bit of money here and a little bit of money there and invest it. One day it'll pay off. And like I said in the very beginning, it's a marathon, not a sprint. If you don't get but a little bit of money back, you know, on your investment, well, that little bit of money will add up. You know, if you reinvest it, it'll add up and add up. Every year it'll add up more and more and more. Especially if you add a little more money to it all the time, it'll make it add up faster. And in the long run, you'll be happy for it. So with that, I'm going to sign off. I hope y'all have a good day. Be careful out there. God bless. Don't forget to like, subscribe, and ring that bell. Thank you, man.